This is the first time in 90 years the US and really the whole world has pushed out three separate methods of expanding the money supply all at once and to a record level. We are living in historic times. Many are ignoring reality. Wile E. Coyote might have some insight that would be valuable, however. We are completely over the cliff. We just haven't looked down yet. It's so unbearably exaggerated, but with so much cash flooding into the system, speculators believe it will never stop. But what about the economy? Is that even relevant anymore? You came here for the truth, so let me unveil that for you. Today we are going to look at the economy. We are going to look at what's going on in the stock market. I want to tell you what's happening along with the information I had shown you just a few days ago, how much the money supply has increased, all the factors that go along with that. I'm going to show you the job situation, give you an update there. I want to talk about China a little bit as well. I have a lot of important information today, so let's get into it right away. While we have seen certain stocks that have gone up like crazy because of the work from home, because of the learning from home, we have not seen the results of these activities actually benefiting those individuals. Many people have stated that the whole work from home thing, it's not working out. Their business just can't operate like this. It's too difficult. They're less productive. We have seen the learning side, unfortunately, not doing well. Failing grades double and triple, some rising sixfold amid virtual learning. There are, just a subset of the actual full data. We will have to look into it further as we get more of it. This is particularly coming from Maryland's largest school system, but I want to get info as wide as I can and see if it's everywhere. Remember, this isn't like homeschooling. This is something completely different. It was a rushed system that was put into place, and I have heard from many that it is just not cutting it whatsoever. And anybody that can send their children to school, oftentimes they've been doing so because they're very disappointed with the whole virtual learning thing. It just does not work, according to them anyway. I want to know your experience as well, but I just found it funny that you'll see the stocks going up like crazy, Zoom being one, but the actual performance of those using these businesses haven't quite really paralleled that, and that's for sure. Southwest Airlines is warning more than 1,000 pilots and 1,500 flight attendants could be furloughed. I've got some other information coming in just a second. Of course, this is yet another company that's getting rid of people, but they call it a furlough, so that's okay. Then I had found this information. Southwest ramps up layoff warning with notices on 6,800 jobs. About 13% of the airline's workers are now at risk of furloughs. This is one industry that was hit really hard, but if you look at the stocks, they don't necessarily represent what's happening in the company itself. When you see Carnival cruises going up on certain days, certain weeks, certain months, it just doesn't make any sense. Because they're not even in business, basically. They might have one trip and that's it. It is not really correlating to what we are seeing in the economy. The economy is one thing, the market is clearly something else. 3M to cut 2,900 jobs in restructuring. And this to me is so strange because it's a company that make masks and all of these other products that are being used in such high demand today. Obviously, there's other things going on at this company, but it just shows you that any company today can take a hit, and jobs right now could very well be in jeopardy. Warner Brothers will launch every 2021 movie on HBO Max at the same time they hit theaters. So we have a problem going on right now. The movie industry basically has had no revenue for a year. So next year we're going to see some changes, at least with Warner Brothers. And this could be a completely different scenario from what we have ever seen before. The way it always worked was that it had to be in the theaters for a certain period of time and then it could move on to DVD and Blu-ray and now streaming. But this could change everything. We'll see if other companies follow suit. I think this is ultimately not a good sign for movie theaters, and I'm interested to see what happens to all of these huge locations that had these movie theaters, and then maybe they had 20 theaters or even more, and what can they possibly reinvent with something like that? Layoffs underway at Walt Disney Television Group following sweeping restructuring. So company after company, I'm just trying to show you that it does really affect everyone. All right, switching gears here. China has become the EU's largest trading partner for the first time, latest data shows, highlighting that the economic ties of the close, comprehensive strategic partnership between China and the EU are intertwined with each other's industrial chain. This is really, really big. And things have really changed between the US and China over the years. There's no doubt about it. For China, they look at it as strategic regardless because they want to be a partner with as many other countries as they can. They are trying to do business everywhere, and that is very clear. Now, China is one that consumes so much. They are the biggest consumer in practically everything today, so they want that to be an option for them. They want to pull from these different countries, but they also want to export to them as well. So they have the numbers in here if you're interested. I just thought it was key to know what has really changed in just a span of a couple years. The dollar is steadily moving down the pack of the world's currencies in December. The euro, the Australian, the Canadian dollars, and the Korean won have all touched their highest levels in more than 2 years this week, while the Swiss franc is at its strongest since 2015. Well, you can look at what they have in here. I just thought it was interesting to see they're trying to make suggestions for why this is happening or is not happening and so on. But I always like to see how this has an impact on imports and exports, because of course, if one particular country, as we had seen previously, for example, Mexico had their own issues many years ago, and they devalued their currency. And when they did so, their exports really, really skyrocketed, and they were using this as a method to, boost the economy. In any country, when you have it versus the US dollar, which it always is because it's the reserve currency, anytime you see that dollar coming down in its value in comparison, then of course you're going to have an opportunity here. That doesn't happen overnight, but certainly as time goes on, you look at it over the past couple years, the US dollar versus its peers has declined. It's been going in that direction. At the same time, the stock market has been rising. Yes, there's bumps along the way and so on, but that's been the trend, there's no doubt. So look how this changes the landscape in trade, as well as how this affects businesses who are reliant on these systems to be in place the way they are. If there is a devaluation of the currency, if there is a big change in the value of that currency, what will it be next year? How can I as a business be able to predict, well, I'm going based on today's prices, but if it's going to head slowly but surely downward or up, let's say, how can I really do business this way? That's why the reserve currency is supposed to be good, because it's stable. And I know, okay, next year, 5 years, 10 years, this is kind of what I'm going to be dealing with. But when we have these fluctuations, that makes it much harder. Now, look at this. On the left-hand side, since March 2020, on the right-hand side, price appreciation. So you can break this down, and just to see where we have come from since the lows here, March 2020, tech stocks 73%, REITs, real estate 36%. You can go down, crude oil 74%, believe it or not. I mean, the price is still historically a little bit low, but it has certainly come off the bottom, that's for sure. And you can go down and see how the different currencies have been bouncing around as well during this period, in which stocks clearly have been outperforming what we have seen in the earlier part of the year. There's no doubt. Digital currencies also seeing some insane growth at this point. Explosion of money supply in the economy, US M1 money stock in the trillions of dollars. Look at what had happened, up 40% in 8 months. Up 40%. Just think of that. It was already massive at this period leading into 2020. It was expanding over and over, month after month, constantly. And then suddenly we just went into this territory that they're not going to be able to actually reverse ever. Now, what does that do to the value of your currency? I think it's pretty obvious. M1 money stock since March 2020 has increased specifically 39%, and the CPI 0.5%. Now that's when you know they're telling a lie. Monetary policy in 2020. The first time in 90 years, the government is using a three-pronged approach to increasing the money supply. The Treasury, direct injection of cash via stimulus checks and PPP loans, $3 trillion direct fiscal stimulus. More is coming, not enough, by the way, what they actually need. Fed, traditional Fed funds, setting the rate to 0%, promise to keep it there to reduce short and medium borrowing costs. 3-month rate lowered by 1.5% to 0%. And on the right-hand side, Fed quantitative easing by bonds via QE to lower long-term borrowing costs, $3 trillion. Increase in the balance sheet, $3.5 trillion if you go back from late last year. 10-year rate lowered by 1% to 0.9%. Who knows where that will go? I just think it is absolutely insane to see what all governments have allowed to happen. They are all working together, of course, to devalue their currencies at the same time. Don't think that this is really being all done on their own and there's no conversations happening. This is all coordinated. When you have funny money, you have funny stats. S&P 500 CAPE, the cyclically adjusted PE ratio, is now above 1929 levels for the first time since 1998. So we will probably head back to where we were at the dot-com bubble and probably surpass it. There's certainly no telling how far this is going to go. I just think it's interesting to compare this to where we have gone in just this very short period of time. Nobody wants to acknowledge it, but here we are. US equities are overbought and at risk of a correction after the recent surge. That's according to Morgan Stanley's Mike Wilson. Just to give you some insight, Mike Wilson has been regarded as the most accurate analyst in 2020, and he's been bang on with everything as the market's been moving first down and then up. And this is what he's saying now. It doesn't necessarily mean, let me tell you from what I've read about him, he is very bullish right now overall. Very bullish. Constantly looking into buy Jim Cramer styles, but he's just saying it is at this time too overvalued, overbought, as he says, quote, the market is overbought and the market is probably a little overvalued, quite frankly, because interest rates are finally now starting to catch up. The risk in the market now is that the 10-year yields finally start catching up. We have a valuation reset because stocks are a long duration asset, particularly the US stock market. We'll see what happens. Just wanted to bring that to you from somebody who's definitely on the inside. Quick point I wanted to make here at the end. Corporate America's cash burn problem is getting worse. Number of high yield companies with negative earnings has surged. Cheap financing has allowed many to avoid bankruptcy. They talk about in the first paragraph a growing number of junk rated corporations, including Delta and Royal Caribbean Cruises, are losing money even before they pay interest and other necessary expenses like taxes. This is truly unbelievable, but hey, here we are today when anything seems to be possible. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about all of the things to do with e-commerce, everything is here for free, theamazongps.com. Wait a second, you've got to see what's going on in my 2 books, because this really describes what you need to know about the central bank's interest rates, the whole financial system, top to bottom. Check it out here at the link in the description. And if you haven't seen this, you definitely want to, because it's so important. It's got what I covered today in depth. Definitely check it out. Click it. I'll see you there.